Just looking at the figures themselves, we actually had not a bad situation in January, I think, looking at obviously a bit of a Christmas boost, flatlining and then February and falling back, contraction in March.
I know, it's quite extraordinary also. It's the first time I've heard what Jeremy Hunt said just a few moments ago about the GDP numbers, attributing the better than expected growth to measures announced in the budget in March. But as you said, in March itself, the economy shrank 0.3%. So it's rather hard to see how that squares. As it happens, I think that the weakness in March can be downplayed. It was partly the bad weather, partly the impact of strikes. I think underlying growth is a bit stronger. But the fact that the economy still eked out growth of only 0.1% in the first quarter is frankly still pretty pathetic. Yes, okay, it's growth, it's a positive number, but that's a very low hurdle to clear. I think we should be aiming for something much better than this.
Yeah, and in terms of aiming where we will go, we did have the Bank of England forecast, of course, indicating it believed perhaps that we'd be 2.25% higher at the end of this three-year forecast period, that things would really start to tick up. I mean, no sign of it as yet.
Well, if I'm trying to be positive, then I would say that the economy has been performing better than most people anticipated. So if you look at the numbers prepared for the March budget by the Office of Budget Responsibility, they did actually predict that the economy would contract by 0.4% in the first quarter. So they're already out by 0.5% just 3 months into the year. I'm pretty confident this year will be a year of upward revisions to forecasts. So the Bank of England has already revised their numbers up. I'm sure the OBR will. And also the IMF and the OECD numbers for the UK are looking basically implausibly weak as well. So relative to expectations, yes, a bit better than expected. But, after a decade or so where productivity growth in particular has been very, very sluggish, we should be doing much better than this. We need strong pro-growth policies. And at the moment, people seem happy with sort of managed decline and just ticking along.
Yeah, which is Sir Keir Starmer's point, more low growth on the back of 13 years of low growth. But for us non-economists who might be puzzled by this push-me, pull-you approach that, the worry about growth in the economy, and yet we have the Bank of England increasing interest rates yet again to slow down the economy.
Well, remember that the Bank of England's job is to worry about inflation. Ironically, the fact that growth is a bit stronger probably made it a bit more willing to raise interest rates again. Its sort of worldview is that you need a recession or at least slower economic growth to bring inflation back under control. I personally think the Bank of England made a mistake in raising rates again this week. Monetary policy is rather like boiling a frog. You don't realise that you've done too much until perhaps it's a little bit too late. And the bank has already raised interest rates a lot, and it's done other things. It's turned off the tap of money printing as well. So I think there is a danger that even one or two small increases could be enough now to tip the economy over. But on balance, I don't think that would happen. And in particular, I was encouraged this week that the banks seem to be hinting that that's it. There will be two more sets of inflation and labour market data before the next meeting of the Monetary Policy Committee. And I think as long as they show inflation falling, as I think they will, then the bank can now afford to remain on hold. And I think that will be a big relief to mortgage holders in particular.
Yeah, because we reflect there were two members of the Monetary Policy Committee who decided to keep it on hold this time.
And I think they're right. I would have been in that camp as well. And the main point that they were making is basically what I'm saying, that there's already been big increases in interest rates. It takes a while for those to affect the economy. And as far as the inflation numbers are concerned, yes, the numbers are high at the moment, but central banks should be forward-looking. And there are good reasons to think that food and energy price inflation in particular are now going to fall sharply.